Welcome back. The Congressional Budget Office says President Trump's big, beautiful bill would widen deficits by nearly $3 trillion after the Senate Finance Committee released its revisions to the bill on Monday. The revisions include major tax reforms and even steeper Medicaid cuts than the House called for, plus a lowered cap on the state and local tax deduction. The SALT comes back down to $10,000 in the Senate. That's down from the House's $40,000 cap version. Some blue state House Republicans pushing back on the revision. New York Congressman Mike Lawler called the Senate proposal dead on arrival when it gets back to the House, warning that he would vote no if the SALT cap remains at $10,000. Joining me now is the man himself. New York Congressman Mike Lawler is here, a member of the Financial Services Committee in the House. Congressman, it's great to see you.
Thanks for having me.
Are you really going to vote no on this?
Yeah. I mean, look.
You're going to blow up the president's agenda.
I've been very clear from the beginning that I would never vote to pass a tax bill that does not adequately lift the cap on SALT. The fact is that SALT Republicans in New York, California, New Jersey, we're the ones that delivered the majority for House Republicans in 22 and again in 24. And if you look at the situation, the fact is that the cap on SALT expires at the end of this year. So we're willing to negotiate. We're willing to keep a cap in place, but it has to be reasonable and it has to provide real tax relief to middle class and working class families. The fact is, when people talk about, oh, we're subsidizing bad blue states, the reality over the past 7 years is that 29 states blew through the $10,000 cap. So to revert this back to $10,000 is absolutely absurd, and nobody would ever support that among us SALT Republicans. We negotiated in good faith with the White House, with House leadership. We got to a $40,000 number, which will cover almost 90% of my district and districts like mine in terms of making people whole so that they can fully deduct their state and local taxes on their federal income tax return. The cap itself, the reason people took the standard deduction and the doubling of the standard deduction is precisely because one of the biggest things they would itemize is their state and local taxes, their property taxes and their state income taxes. So a lot of New Yorkers were unfairly hurt in this process. We can all agree Kathy Hochul's a disaster. We can all agree New York needs to reform its spending and tax policy. But to double tax New Yorkers or Californians is wrong. And by the way, Republicans have fought against double taxation for years, including on the estate tax.
What do you say to the Senate who says, look, we don't have any sponsors of the SALT deduction in the Senate, and by the way, it's not our problem or our fault that Kathy Hochul and the governor of New York, the governor of New Jersey, the governor of California have sky-high taxes. Cut the taxes.
Look. We agree, cut the taxes. But the fact is, when they talk about subsidies, we can get into the game of subsidies and who subsidizes who. A state like South Carolina takes more federal dollars than tax revenue it generates to the federal government, okay? So we can go through that game chapter and verse. But when I look at the totality of this, if unlimited SALT, which will come back into effect if we don't pass a tax bill, is a $1.3 trillion hit to the Treasury. So we're saying, look, we'll give you $1 trillion to double the standard deduction. We'll give you $1 trillion to increase the child tax credit. We'll give you $1 trillion to pay for no tax on tips and no tax on overtime. But we're not giving you the full boat. And at the end of the day, this is a very simple game. It's 50 plus 1. You need 218 votes in the House, and you need 50 plus 1 in the Senate. And
all right, but look, I mean,
at the end of the day, that's what this boils down to.
You say, you know, if nothing is done, it's going to go back. I get that. But then it's on you that you allowed the largest tax increase on people that we've ever seen. You comfortable with that?
I have negotiated in good faith from day one. And I am still willing to work with my colleagues to get this done. But we are not going to be fleeced in New York when, in fact, it was New York Republicans and California Republicans that delivered the majority in the House. I won a seat that Kamala Harris won. So this, at the end of the day, boils down to being able to deliver for my constituents, fight for my constituents, and that's part of the process here. Earlier
in the show, I spoke with your colleague Ryan Zinke, and he said, "Look, a little salt, a little pepper. We're still in the recipe making business here. If it comes back to the House and then the Senate agrees, okay, it's not 40,000, but it's 30,000. Will you agree?"
No.
You're not going to agree even to $30,000 cap?
That's what Ways and Means.
How about $20,000?
That's what definitely not. Ways and Means put forth $30,000, and they did so trying to jam us without negotiating. And we were able to force a negotiation in good faith with the Speaker, with the White House. We came to a $40,000 agreement. Look, I like sea salt, not that granular stuff. And so that's what we're talking about here. We need to provide real middle-class tax relief. We negotiated. Okay. That's the deal. Stick to the deal.
I want to get your take on some other things,
yes,
because I don't know that you, at the end of the day, are going to be this, adamant about it, because you're not going to want to blow up the president's agenda, I don't think. But,
I'm not trying to blow up the president's agenda.
Well, you will if you're more than 3 no votes in the House.
I am representing my constituents and my district. And look, at the end of the day, this boils down to a simple reality, which is not passing a bill, which we all agree would be catastrophic from a tax standpoint.
Yeah.
Not passing a bill is not an option. Mm-hmm. This is an important component to the deal. And my colleagues, whether they like it or not, have to accept it.
One of your colleagues is running for governor, we think, Elise Stefanik. You still going to run for governor?
I'm looking at it. We're going through that process right now. A new poll shows that I am better positioned to win against Kathy Hochul, because at the end of the day, you have a state that is 2.5 to 1 Democratic. You have to be able to appeal to independents and Democrats and Republicans. I've won 3 times in 2-to-1 Democratic districts.
So is that what this is about? Is that what this is about?
No, the SALT issue is about fighting for my district. This is something I said from the very beginning. I would never support a tax bill that did not lift the cap on SALT, and I will not break my word.
What's your take on remittances, 899, all of these other financial services issues that the Senate, I think, tried to tweak when they sent it back, but the House bill would impose this 3.5% tax on remittances sent in the United States by those who are not U.S. citizens. Some people feel that, as well as, 899 in particular is capturing more people than it was intended, and there are all these unintended consequences.
I think that's right. I just met with the Australian Consul General yesterday. That was an issue that was raised when you're trying to bring investment from outside into the United States. You've got to be very careful on some of this tax policy. So this is still fluid. It's still a negotiation. I think we have to be cognizant of the fact, and what the president is trying to do is right size our trade imbalance. He's trying to get foreign investment into the United States. We don't want to counter that by making certain changes that will negatively impact that.
What about the stablecoin legislation? So the Senate passed a Genius Act yesterday, 68-30 vote. We just had the CEO of Circle on, and he's talking about this being a landmark bill, establishing federal guardrails for stablecoins. The House's version, the Clarity Act, poised for a full floor vote after the House Financial Services and Agricultural Committees advanced the text last week. Where is that? And I mean, the demand for treasuries, I think, is an interesting element of that.
Yeah. So obviously, there's a little bit of difference between the 2 versions. Still needs to be reconciled in a way. But I think the objective is to get a actual regulatory framework in place. We need to be on the cutting edge here. We need to be leading this as we move forward, as the economy changes, the global economy changes, as digital assets become a bigger part of the global marketplace. So having a regulatory framework is critical. I think the House is going to move forward with the Clarity Act, and then the two are going to have to reconcile. But this is a tremendous step forward. I think this has been years in the making. There's been a lot of work, bipartisan work by the committee to build consensus, to actually put a regulatory framework in place. I think we will get there, most likely after reconciliation, but I think we will get there this year.
All right. You've got a lot on your plate, Congressman. When are you expecting the big, beautiful bill to come back to the House?
Well, I think the Senate is trying to stay on track with that July 4th framework that Leader Thune has laid out.
And then you get it after that.
We're gonna deal with it right after that.
So you'll have it on the president's desk mid-July? I
would think certainly before the August recess.
If you agree to a lower SALT cap.
Not a lower SALT cap. We're going to keep it at 40,000. The president understands how important it is.